So if there's something that has made me money within the past 5 years of trading, it is market structure. So it is easy to understand, and a lot of people just have so many ways of misinterpreting the real way of spotting market structure entries. So today we're going to be talking about market structure. So for market structure, it has two sides, right? Which is basically the buy market structure and also the sell market structure. So one very important thing is understanding when and where to buy and when and where to sell. So we're going to be starting with the buys first. So for the buys, there are two things that is very important that you need to be able to spot. First off, you need to spot a low and a high. So you need to understand how to spot a low and a high. So if you guys can clearly see my chart here, you see case scenarios where we have, this is an example of you seeing an uptrend, which is basically telling you where to buy based off of markets moving upwards, right? So first thing about market structure for buys is you need to be able to spot something called higher lows and higher highs. If you're spotting your buys, right, for you to be able to spot your buy entries effectively, it will consist of two things majorly. It's always either the higher lows or the higher highs. Now, it's very important that you know when to buy at a higher low and setting your stop loss at the previous higher low and then setting your TP at a higher high. All right, so it's very important that you know where to actually enter as regards of the higher low, because it is not every higher low that you basically take your entries from. There are case scenarios where you have two equal higher lows. Let me give you guys an example on the chart because it makes sense that I reference it to the chart. So let's go to trading view. Let's go to trading view. And let me give you guys an example. Let me use chart patterns as an example. So if you guys look clearly, you can have something like this in the market where market is basically going up, right? Create a pullback, then push up, create a pullback, and then push up, right? Then you can have a scenario where market creates something like this. Market pushes down price here, right? And then go up. Bear in mind, this area that is here is already a higher low, and this area that is also here is already a higher low. But one thing that differentiates these two higher lows from the previous higher low that is here is because these two represents a structural liquidity, as I call it. Do you guys understand what I'm saying? So here, basically would say there are two equal higher lows, right? And what market does for equal higher lows like this is that market will basically come down and sweep off these two areas and come to the singular higher low that is below it, and then we see a reaction to the upside. So if I were you, I would make sure that I'm spotting this on a higher time frame mostly to basically make sure that my confidence is stronger. Are you with me now? So your confidence is stronger because you're spotting it on a higher time frame. So what would you do? You'd have your entry below these two equal higher lows because expecting market to come down, sweep off these areas, activate the singular higher low that is here, and you should see a solid reaction to the upside. Now, where's your stop loss going to be? You see this low that is here. That was the initial start of a trend. Basically, is where your stop loss would be, and then your TP could be here. Now bear in mind, you would want to set your stop loss not exactly at this low, but at least 3 to 4 pips below it. Why? Because markets might want to act crazy sometimes where it's basically going to come down to this area and then push up. So you want to give it room to breathe, right? Are you understand what I'm saying? So let me give you guys chart examples of how, because this is just the pattern. So let me show you guys a chart example or an example of something like that. So let's try and see a couple of other pairs that we can use. So look at what happened here. So we have something like this where market created a low, then it's created this high, like I showed you guys. Then we have market pushing down price to this area, which is basically a new higher low. Bear in mind. Now market then pushes up price here and returns to this area that we have here. Right, so upon returning price back into this area that is here, what did we have? We have an instant reaction all the way to the upside. Now, if you were to take this trade, your stop loss would have been around this low that is here, right? And then if I were to calculate this trade, you would have seen that this was on a higher time frame, like 45, at least making the confluence a bit stronger. So we're looking at, let's say, this trade being, so if we're going to set the stop loss, we'll probably set the stop loss around here. Like I told you guys before, give it a room to breathe. That is why we're not setting that exactly this low. We extended it by a few pips. So the stop loss was exactly 12.8 pips. and then the TP for this trade is 66 pips. Now bear in mind, after successfully hitting this TP, right, as you guys can see, after successfully hitting this TP, as you guys can see that it did, after successfully hitting the TP here, it still continued to push up price all the way to this high. But we've already gotten what we wanted. And how did we get that? We had a low that created a high. And bear in mind that there was already a high here, but it created a new high, basically making this a higher high, right? Because this high is higher than this other high that is here. But what did market do? Market then returned back price into this higher low area, setting your stop loss below here, and then we saw a push to the upside. So this is a chart example of how you can use market structure, which consists of higher lows and higher highs, for the buys to get a quality buy setup. So I hope this was able to help you guys and how you see the market differently. So now let's talk about the sales. So for the sales, two things is very, very important when you want to basically sell, right? It's very, very important that you understand two things. Now for the sales consists of basically the lower highs and the lower lows, right? So the aim is to basically sell at every lower high and then set your take profit at every lower low, right? But the difference is you have to spot it on a higher time frame. Why am I saying that? If you spot it on a higher time frame, your confluence is stronger. It doesn't necessarily mean you're going to be right or correct 100% of the time, but your confluence is stronger because you spotted it on a higher time frame. So now let's look at examples of it. So if we look at this closely, let me give you guys a quick one. So we're going to be looking at, let's say, you have a market pushing down price like this. That's for the sales is when market is coming down. So you can only effectively spot lower highs and lower lows when the market is in a downtrend, right? And downtrends must create retest. So in the process of it creating retest is where your lower high is. So now market pushes up, creates the retest, break structure, pushing down, create another retest, and then you sell, right? So remember that you sell at every higher high, set your stop loss as the previous. So you sell at every lower high, set your stop loss at the previous high, right? And extend this by 4 pips from the high. So you give your trade room to breathe, okay? So you sell at the lower high here, and expect market to push down price. Now let me show you guys a chart example of what I'm talking about. So look at what just happened here. It's even fresh. We have it here already. So now if you look at this, we have something like a high that created this low and is here. The market push up price to this area, and then we have what? A push down. Now this push down that happened here broke structure. It's also the pull down that happened here broke structure. Now what did we expect? We expect markets to push up price back into that area, right? And what did we have? We have bearish move all the way to the downside without a pullback. So if I'm going to take this trade, I would obviously have a short position because this is my entry. Why am I taking this as my entry? Because it has reacted at that area initially. So you're not just taking a trade off of a fresh zone. You're taking a trade because of it has an initial reaction, right? So now if we look at this closely, we're going to be having something like this. Yeah, that would have been the stop loss for this trade, and this would have been the TP. So for this trade alone, trading only market structure, you would have seen that you were able to spot 35 pips stop loss with 111 pips TP being smashed. So literally, if you're one standard lot on this trade, you'd have made over $1,100, and the equivalent like about 1.3 million naira range instantly on this trade. With 0.1, probably would have made about 120k plus, and the 0.01, you would have made roughly about 13k or so, or 12k. So I hope you guys have been able to learn how you can effectively trade market structure, looking at this setup for the sells and the buys. So don't forget to turn on your post notifications for our next video, and always remember, trade responsibly, don't get your accounts blown. Bye for now.